Heavy economic data. Hello and welcome to 𝗃𝗏𝗁𝗀 Outlook. After the banking storm and a light week, we will have a week ahead with the heavy economic data, with the UK and Australian employment and retail sales and inflation numbers from the most developed economies. After last week's inflation numbers in the United States, other data from Europe, and this week's numbers, we will be able to realize how central banks should react to the current economic situation and concerns. Let's check the most important events and data of the week ahead. Number 1, UK retail sales and employment data. Last week, UK GDP for the 2021 fourth quarter confirmed the weakness in the economic situation. At the same time, December employment data was optimistic and showed that even if it's slow, still moving forward. This week, both employment and retail sales are expected to increase to leave the argument for the further BOE tightening moves in the coming months. Unemployment rate on Tuesday is expected to stay unchanged at 4.1%, and Friday's retail sales are forecasted to grow by 0.6%. Expected numbers will help the UK stock markets. Number 2, US retail sales. December retail sales numbers came as a real shock to us. During December, total sales fell 1.9%, while excluding spending on autos and gas, sales fell 2.5%. We can bring two reasons for that: early holiday shoppings in November and increasing prices, which has reduced the people's purchasing power. On the other hand, the latest labor market data confirmed the increasing job numbers and average earnings, and it means that we can expect better numbers for January. The overall expectation is a 1.2% gain in retail sales, since in 2022 economy mostly will depend on consumer spending. These data will be very important for the market participants. These numbers will help the US dollar index to increase a little bit more. Number 3, Canadian inflation. With increasing energy prices, consumer inflation in Canada also increased by 4.8% in December. And now, with 5% expected increasing inflation in January, we can give more chance to Bank of Canada rate hike in next meeting to control the inflation, and repeat it a few more times over the year as well as in 2023. Current expected inflation numbers will help the loonie to stay steady against US dollar. Number 4, US housing numbers. Despite ongoing supply disruption, the pace of residential construction remains fairly strong, with the total housing starts rising 1.4% in December to a total 1.702 million units annual pace. Detailed numbers show that in the past months and even the years, single-family houses growth is decreasing as a result of stay-home orders of a pandemic. Since most related issues are decreasing and our economic factors are improving, we expect to see a small improvement in January, with the overall construction starts rising to a 1.705,000 unit pace during the month. Number 5, Japanese inflation. Unlike the other developed and developing economies, inflation in Japan is still well below the central bank's targets. For January's data, we are again expecting to see lower numbers, and it means that the Bank of Japan still will hold its current monetary policies. And while the other central banks around the globe tightening their policies, it means more pressure on Japanese yen. Divergence in the central bank's policies should hold the pressure on the yen over 2022. Thanks for being with us, and hope this week will be an amazing week for you.